Hello, YouTube. Salivate Metal here. And as most of you know, for those that don't, this is a continuing series that I'm doing where I will invite a guest to come on a live feed that's scheduled usually. I've had two other guests before. And now we have Belangp has agreed to join us here. And so what this is about is essentially I'll ask him a few questions and give him an opportunity to describe his channel and the like, and then we will commence with asking questions from you on the side chat here, which I have open. And I predicted this because of the subject and the guest that we have here, Belangp, that we'll have a pretty good crowd, which is great. But we need to have a little bit of order here. So I would sort of ask that you would kind of limit some of the chatter on the side, at least a little bit. But if you want to engage each other, that's fine. But if you want to ask a question, put 2 asterisks before the question so that I can see it and very clearly, and then that way I'll know to ask. And I know that given the subject and the time that we have, I won't get to all of them, but I will try to get to as many as possible. I know some people on the announcement video have asked some good questions already, but we want to take the questions from those of you who scheduled the time to be here first to get first shot at those. So with that being said, welcome Belangp. And you have actually been a guest on several other programs regarding gold and silver. And I believe you do go by the name of Paul as well, right?
That's right.
Very good. Okay. Well, thank you, Paul, for joining us. And so we'll just start by just kind of describing your channel and what got you interested in gold in the first place and precious metals.
Well, I came across some material in the late 90s that I thought was very compelling. It talked about wealth accumulation, monetary theory, and gold and silver in particular. And the more I studied it, the more I realized there was a very compelling case to at least include it in a portfolio where a person was building wealth over time. And as I got further and further into it, the gold and silver bull market started, and turned out to be the right place to be at the time. And so later on, I decided that what I wanted to do was pass along some of those teachings, because I was fortunate enough to stumble across this material that people were kind enough to put together and publish for free. And I wanted to basically build upon their work and provided some educational materials that other people could at least digest and consider for themselves and decide if gold and silver was the right thing for them.
Great, that's great, and you do a wonderful job with your videos for sure. And for those, again, for those who aren't familiar with you, you provide this service gratis, pro bono, and you don't monetize your channel. And this is just a service that you provide. You're not affiliated with any organization. You are, I believe, a chemical engineer, and so you're just a regular guy like us that who happens to have studied the subject. And there's a lot of history behind this as well, and you know a lot of that history, and you've described it in your videos. So I think that makes you very unique, considering your knowledge. And your motivations. You're not selling anything, and so I think that when people watch your videos and see that you're literally just passing along the knowledge, because you understand the true value of gold and silver, and I believe that that's what most of us thirst for, is that knowledge.
Well, when it comes down to it, there really is nothing to sell. Gold and silver are surprisingly simple, and I probably make it a lot more complicated than it needs to be. But the reason why it seems so sophisticated to a lot of people, I think, has been because for decades we've become rather confused in terms of what is money and what is wealth. And so a lot of this knowledge of gold and silver that I put in my videos is really quite old stuff. And what I hope to do is clear away some of the confusion, I think, that keeps people out of the metals.
Right, and I think that's part and parcel to what makes your videos so attractive is you package a lot of information. Yeah, some of it may, obviously if people did their research from different sources, they can compile that, but you've essentially packaged it up and put it in such a way that, and of course, there's so much knowledge and so much information in them that sometimes I know for myself, but others I've read on some comments, they have to go back and listen either to the whole video again, or what I do sometimes is once you say something and I'm like, oh, that's interesting, I'll go back and listen to it again to really absorb it because it really is good information. So, yeah.
Yeah, I do the same thing with some of the material that I read in the late 90s. It was amazing how prophetic it was, but I still go back and read it from time to time, and I'm always picking up new gems of information that passed me by way back then.
Great. All right. Well, good. Thank you so much for that. And now I'll start with some of the few questions I had, and then we'll continue on with some of the questions from the audience here. And
Sure.
again, I want to thank everyone for joining in here, watching live. Very much appreciated. And so the first question is that with gold and silver, the gold to silver ratio is starting to close up a bit now. There are some people that are starting to get bullish on silver. And as most people know, silver is seen as a commodity, probably more so than as a monetary asset these days because of its wide variety of uses. And that's not a slam on silver. But what are your thoughts on silver as compared to gold? And what are your thoughts about the gold to silver ratio right now?
Oh, that's actually quite a long question. I'll
Sorry
try
about
to
that.
keep it. That's okay. I'll try to keep it reasonably quick. First of all, silver is money, and it's a monetary asset, and it has been for a very long time. It's lost some of the focus that it used to have, primarily because it's not used in the international banking system, and really hasn't been, especially in the United States since 1873. But from time to time, it does get its focus back. But the fact that it's used also industrially as well as a wealth reserve for private individuals does kind of have a schizophrenic character, and it makes it very hard to predict. Um, it tends to be very volatile and also quite bulky. That's one of the reasons why I personally prefer gold to silver, because the monetary authorities a while back had decided that gold really was more suited towards international commerce. And going forward, if there is a monetary panic, I think more of the wealth is going to have a focus towards gold and silver. Now, that doesn't mean that silver won't do well. I think it will. I just find it a lot harder to predict whether or not it will do well. Now, as far as the ratio is concerned, it really was an artificial ratio, that 15 to 1, 16 to 1 ratio that was picked a long time ago, back when we had a bimetallic standard. And the reason why it was selected was because gold and silver both function primarily as money. And so the governments of the world basically decided what the ratio was going to be. And they picked the prevailing ratio at the time as the relative abundance at which it came out of the ground. And the reason why that was important was because as the gold and silver was mined, if one was produced faster than the other and became more plentiful, then having a pegged ratio fixed by government would drive one out of circulation and the other back into circulation. It would make one scarce and disappear, and that was it created quite a bit of trouble for the monetary authorities back at the time. So anyway, that's one of the reasons why the silver was basically eliminated from monetary standards. It worked for a very long time, but in the late 19th century, it was abandoned. And right around that time, silver was still available to the public, and it still circulated as coins. But the market basically decided what the gold to silver ratio was going to be. And in my video series, Good Money Appreciates, one thing I demonstrate is that over the past 150 years, that gold to silver ratio has in fact been climbing. And even though neither gold nor silver are used right now as official money, um, over the past few decades, that ratio has settled to be around 63 to 1. And so that's the ratio that I kind of have in my head to determine whether or not silver is a better buy or gold is a better buy at any particular point in time.
Okay, great. Yeah. Yeah, we're moving closer towards that 63 to 1 ratio now. But and you mentioned, about the simple storage method as you see here. Here's an ounce of silver, here's an ounce of gold, and you can see the massive difference. It's about half the size and about twice as dense. So yeah, certainly is easier to store a lot more wealth in a smaller space for sure. Indeed. Well, great. Next question: what are your feelings on the geopolitical stage, especially after Brexit? Um, the Brexit has happened. Where do you see things going, and how do you think geopolitics will influence metals pricing?
Well, Brexit is, to me, very interesting because it's kind of a step away from the trend towards globalism that we've had. And I don't know exactly what's going to happen over the next few years, but I always thought that Europe being pulled together and having a monetary union and a trade union, but not really having a real strong political union and a fiscal union that had the backing of the people, it was rather unstable. And I think that given that they have very diverse economies all being tied together with a couple of very strong countries supporting all of the weaker economic nations, I think it's bound to dissolve at some point in time. I don't know when that's going to be. I'd probably expect it to happen gradually over the next 10 or 20 years. But I guess we'll have to watch that together, huh?
That's true, and it is quite fascinating because I think the actual Brexit won't actually occur in full until another 2 years from now. And of course, October of this year. Speaking of that, I think that's the renminbi. I think that's how you say it. The yuan joins the breadbasket of currencies, and I think that's going to cause some interesting things to occur as well. But we shall see.
Yeah, and it very well could. And as far as the impact that that has on gold and silver, I think that the more that people lose faith in currencies as stores of wealth, I've always questioned whether they actually should put their faith in currencies as stores of wealth. They'll be looking for an alternative, and the natural alternative to that traditionally has been stocks, and a lot of people have gone after shares in companies. But I think more and more people will probably put more attention towards gold and silver because over the next, I think, 10 or 20 years, stocks will achieve a positive return, but it's going to be a very bumpy ride, and it's going to be quite lower than what people were used to back in the 80s and 90s.
Right. Good. All right. And you mentioned stocks, and that flows nicely with my final question before we move along to questions from the audience here. And that is, you in one of your videos you talked about bonds, and
Mm-hmm.
you were kind of bullish on bonds, but in a previous video you didn't seem to as excited about bonds. So what are your feelings about treasury bonds right now, T-bills?
Well, that's a good question. I'm trying to remember the video you're talking about. I know that I talked about savings bonds as a pretty good vehicle for the small saver who wanted liquidity. Was that the one you were talking about?
I think so. I think that's right. Yeah.
Okay, those are different than
Okay.
those
Okay.
are, those are different than typical bonds. See, like the Treasury bills are generally have a maturity of about a year.
Okay.
So They offer very, very low returns right now and are probably not worth holding. You're just as well off holding cash, in your house as opposed to holding a treasury bill. The notes, which tend to be 5 to 10 years worth of to maturity, don't really yield much of anything anymore at this point, and so all they offer is downside risk. If interest rates start climbing, then people have to hold to maturity in order to get the cash back, and even still, the cash might be worth a lot less than what they receive in interest. And on top of that, the interest gets taxed, by the federal government when you receive it. And then long-term bonds, I think the 30-year bond right now is yielding about 2.5%, which really isn't much to speak of at all. Now the savings bonds, by contrast, there's two flavors. One is an inflation-adjusted savings bond called the I bond, and the attractive feature of that is that every 6 months, the rate of return is adjusted based upon the trailing 6-month CPI, and they use the CPI that includes things like energy and food, and so it's not quite as jiggered as the CPI that you typically hear referred to in the media. So that at least would give you an opportunity to at least come close to preserving your wealth, although it really doesn't protect you against currency failure. So, I recommend that a person keeps a relatively small amount in that, just so that if a emergency need pops up, they can cash out and not have to dip into their gold and silver hoard, because you never know with gold and silver at any one point in time. It could be down in price 10-20%, and if you had to sell it at the wrong time, you'd be losing a lot of wealth. Now the double E savings bond is interesting to me because although it's currently yielding 0.1%, that's its quoted rate, one thing that they don't publish widely, but is shown on the Treasury's website, is that they guarantee that it will double in face value in 20 years. So if you hold that for 20 years, then it will automatically double, and what that turns out to be is a 3.5% rate of return. So it's actually quite a bit more attractive than a 20-year note or a 30-year note. So
Okay.
does that answer your question?
Yes, yes, yes. Thank you, and thank you for the clarification between the types of bonds within the savings bonds, but also between the T-bills and the actual savings bonds. So thank you. Yes, and I'm kind of scrolling back up here because we're going to start the questions from the audience, and I may even throw in a couple silly ones in here too. But and I'll ask you one while I'm scrolling up to find the first one. But before I do that, I want to remind people watching, if you want to ask a question, and just questions, not statements, the questions, put 2 asterisks. That's the symbol above the number 8 before your question, so that I know what to look for. So while I'm scrolling up to find one, I'm going to ask Paul a question that he asked in the last hangout. Who has better hair, Donald Trump or Hillary Clinton? So what do you think, sir?
That's a good question. I'd kind of like to superimpose them on each other.
That would be a fun little Photoshop exercise. All right, so here's a question from 32 Common Sense Guy. Can you ask Paul, gold is so high for a lot of us. In other words, it's a lot to afford. Does he think buying the 1-ounce Canadian palladium maple leafs are a good substitute, being less than half the price?
Well, you're talking about less than half the price per ounce,
Right.
but then you have to add in the premium too. So you have to consider that. You have to consider liquidity. Um, Palladium may do well. It's by no means certain. It's kind of like silver and platinum in terms of its predictability. So, I mean, you could buy it if you think that it will do better than gold. There's certainly nothing wrong with that. It's going to hold its value pretty well over time. Um, but if you can save up enough for a 1-ounce palladium coin, you can also buy a half-ounce gold coin. I mean, most of the mints do have half-ounce equivalents that you could buy. You could buy a quarter-ounce gold coin. You could buy a 10th-ounce gold coin. And you know, a lot of private mints also put out small 1 gram, 2 gram, 5 gram bars that you can purchase.
Great. All right. Let's see here. Silver Imp asks, what is Belangp's 401 in? In other words, your 401k.
Right now,
Yeah.
it's Infidelity. No,
Fidelity.
I'm kidding. It's currently in the S&P 500 index fund.
Okay, great. Let's see here. Okay. Pit Bullion asks, what will happen to the value-added tax after the Brexit in the UK?
Oh, I have no idea.
All
I,
right.
uh, I can't even take a guess.
Yeah, that's internal politics there. Let me go back up here. There's a couple questions that I missed up above. I think Mud SWAT had one, but I'm not finding it. Let's see here. So while I'm looking for that, white liquor or dark liquor, and why? That's my question. While I'm finding another question from the audience here.
Does bourbon count as dark liquor?
Yes.
I like bourbon. I like scotches. And why? Simply because I think they taste better.
All right. That's the best reason at all. All right. That's the best reason to like a certain beverage. Okay. Here's Mud SWAT's question. You can have more silver per dollar than gold. So if silver ever sees gold prices, you'll be better off, right?
Well, I think you could always have more silver per ounce than you can gold, but a similar argument can be said for nickel, right? I mean, you could buy tons and tons of nickels for a couple $1,000s,
Right, right.
but that doesn't necessarily mean that you have more wealth, and it's certainly not going to be more convenient for you. So I think everybody's got to make a judgment call for themselves as to what they're more comfortable holding, and you know, what they think is going to appreciate in real value, that is in real purchasing power over time. And you know, I get the argument that you know, the gold to silver ratio could go to very low numbers. In fact, I sold several thousand ounces worth of silver back in early 2011 and traded it for gold, and it was actually a very good trade at the time.
Right.
Although, you know, the ensuing 3 or 4 years made me wish that I had kept it in cash. But you know, I mean, hindsight's only 2020. But you know, the one other thing to consider about silver is that you will pay higher premiums for it. So you know, while you might see a gold to silver ratio that's well, I guess now it's in the high 60s. When you take into account the higher premium on silver, you know, that'll make the gold to silver ratio actually quite a bit lower when you purchase. So yeah, you really need to consider the retail gold to silver ratio and not the ratio of the spot price. So just something to consider.
Great. Thank you for that insight. Argentus Maximus asks, survivorship bias in stock indices. How does gold compare when the weaker stock replacement is removed?
I'm trying to think of a good answer to that, because I'm trying to understand the question. Maybe he could rephrase it.
Okay, all right, we'll give him a chance to do that. Alexis Rodriguez says, Paul, your take on mining stocks. Would you consider as a hedge? Do you recommend purchasing mining equities at this time or simply buying physical?
Well, here's my view on mining stocks. They are a speculation. They could be a good speculation, but they're companies, right? So the executive management of those companies is operating to make a currency-based profit. So when a mining company decides to bring a mine into production, what they're going to do is they're going to attempt to finance it with outside funds, okay? Because they're not cash flowing the development of the mines. The mines themselves take, you know, a decade or more to bring on stream. So what they're going to do is they're going to borrow the money in order to start the mine and pay their workers and buy the equipment and whatnot. And part of the activity that's involved involves future sales. So what they're going to do is they're going to sell futures contracts. And these, believe it or not, are the large commercial interests that are constantly shorting gold and silver. It's these companies that need to lock in the future price of what they're mining to make sure that the project is profitable. And it's also something that the banks who lend them the money require that they do, because the banks want to make sure that the mines can pay them back. So think of a mine more like a company as opposed to a holding of gold and silver. And flash back to, let's say the early 2000s, when gold really first started its run. You had very large companies like Barrick, who, yes, they were, you could consider them a leveraged play on gold, but more than a decade worth of future production had already been sold at rock bottom prices. So those are the kinds of things that you need to consider when dealing with the mining companies. Plus, the other risk is you could end up with a relatively corrupt or incompetent leadership team. Most of those have been weeded out, and the mining companies can go bankrupt. But gold and silver that you store yourself, they'll never go bankrupt. So what I recommend is somebody who wants to use gold and silver to build their wealth, hold most of their precious metals assets in the physical gold and silver, and then if you want to dabble in mining stocks, maybe take a small percentage and buy them here and there just to add a little flavor.
It's a good idea. It's a good advice for sure. Here's a double header. Two questions sort of run together here. 32 Common Sense Guy says, does Paul collect any numismatic coins? Which series? And Bozo asks, do you like gold sovereigns?
Yes, I collect some numismatics. Classical numismatics. I like old Morgans, so I have a few of those. I like peace dollars. I have a few of those. I also like some of the modern coins. I buy, one of my guilty pleasures is buying one MS-70 Kookaburra every year when it comes out. So I have a collection of those, and those are not intended to flip. Those are just intended for my own personal pleasure. I have them in a case at home. For my wealth holdings, I like to keep it simple, so I just buy plain bullion coins. And as per the gold sovereigns, I do like the gold sovereign. They tend to be fairly low premium, and generally you can find them. They're quite competitive relative to a quarter-ounce gold eagle, which they're pretty close to in weight. So those can definitely be a good investment. I think you just want to keep the premiums low.
Right. Very good. And you like eagles, gold eagles. Let's see. General Stack asked a question. Significant. What are the odds of significant hyperinflation?
I think they're actually pretty good. They've occurred throughout history at regular intervals, and I think that we have the barrels loaded for it right now. What it's going to take is a general loss of confidence on the part of the people.
Right.
And that's the unpredictable part. So will we have a hyperinflation at some point in time? I think the answer is yes. Do I care to guess at what that point in time is? That I will say no. And that's one of the reasons why I still contribute to my 401k, because you never know what the future is going to hold in store for you.
That's
so,
right.
I keep a significant amount of money in gold and some in silver, but I also have some paper assets as well. And if I retire and the system hasn't fallen apart by then, I will be drawing down those paper assets.
Great. Space Marine asks, what is your opinion on oil prices over the next few years? Plus, with the gold oil ratio being high, would you still buy oil stocks or dollars?
Okay, with oil, I think that productive capacity was severely overbuilt because there was basically a frenzy around these shale oil companies, and there was a lot of investment. And by the time a lot of these rigs came online, they were oversupplying a market that was already weakening in terms of demand, and that's what caused the price plunge. So because of that overcapacity and the fact that it's really a transient effect, I put out a video basically saying the gold to oil ratio is temporarily broken. And I forget when I put that video out. It was many months ago. But I basically said that I didn't think that it was going to be a reliable indicator for at least another few years. I think what's going to have to happen is the shale oil companies are going to have to be driven into bankruptcy, which most of them will be, even with current oil prices, but it's going to take a few years. And once that happens, I think the oil price is probably going to start to rise.
Great. All right. DB's coin hunting, and I'm sorry, I'm kind of moving through these quickly because we have a lot of questions here. But here's a fun question. DB's coin hunting asks, if you buy a drink or buy a snack and a drink, what would you guys get? So I guess it's a question for both of us. You go ahead first.
A drink and a snack?
Yeah.
Oh, I would get, I think, a Maker's Mark bourbon, neat, with maybe a handful of mixed nuts.
Nice, nice. And as for me, I would get a an almond dark chocolate Snickers bar, and to drink, I would get a chocolate milk. I'm hardcore like that. Let's see. All right, let's see. Okay.
Did Argentus ever get back to you?
What's that?
Did Argentus ever get back to you?
Oh yeah, let me see here. Thank you for reminding me here. Okay, so okay, I'm back up to that same question. Let's see here. Let me look for it here. Okay, here it is. Every year, the weaker stocks are removed from the major indices and stronger stocks put in their place. So the performance of the index exceeds the performance of the stocks that comprise it, which means that the long-term performance figures are loaded data versus gold spot price. You might have a run for your money with intelligence with this Argentus Maximus fella.
Oh, he's very smart. I did an interview with him one time. He's as gentlemanly as he is smart.
Yes, he seemed like a nice guy. Yeah, very cool. So did you
Yeah,
understand that question?
yeah, I did, and he's right. You know, if you take a look at statistics going back to 1970, even if you give the full benefit of the doubt to stocks, um, you know, the relative outperformance of stocks to gold that has been promoted throughout history doesn't really show up over the past few decades, and that's being that's giving stocks the full benefit of the doubt. So, you know, Argentus mentioned survivorship bias. That's probably worth at least a 0.5% to 1%. Then you throw in on top of that, you know, taxes. You have to throw into it, you know, management fees and things like that, commissions. But gold, one of the nice things about that, you buy it once, you can hold it for as long as you choose. You don't pay taxes on it until you sell it, and you could argue whether or not you need to pay taxes on it at all. I tend to do that. You know, I tend to pay taxes when I sell. Um, but you know, I do agree with him that the benefits of stocks have been overstated. That's not to say that they're not good investments. I think in the long term, over the next 10 or 20 years, I think they'll probably return maybe 5% on a real basis, but not much more than that. Not nowhere near the 10 to 15% that we heard bandied about, you know, a couple decades ago.
Right. Okay, great. Now this question, I'm not sure if I completely understand, but it's a somewhat serious question from the exact opposite in intelligence in the Suave, and it's from Allin Gold, actually. He asked,
Oh, hi, Alan.
where and when do you expect 24K? And maybe he means, um, do you like, the purest of the pure gold, or where and when do you expect? I'm not sure exactly what the question means, but I guess it's related to the purest of the pure gold.
Do I like it?
It says, where and when do you expect it? 24
Where?
karat gold. I don't know what exactly. Maybe he can clarify that for us if he's still here. Um, let's see here. Okay, we'll go to the next question. Mudswat asks, are you a dog person or a cat person? By public demand, gold and silver will balance out and seek the same level.
I'm a dog person.
Cool. And you can probably guess what I am.
I think you're a cat person.
Yep, I'm a cat person. Very good. Good deductive reasoning there, Paul.
We do have a cat here too.
Okay, cool. All right, Christopher Sanchez. What is better, a 401k or a 403b?
Well, I think they're both they both have the same advantages.
Okay.
They're just different entities. One is for government employees, and the other is for private organizations. It's just different sections of the tax code.
Okay. All right.
So, so I would think that they're both the same. I'm not a government employee, so I don't have a 403.
Right. Let's see. Okay, I lost my place here. Let's see here. Favorite heavy metal band while I look for my place here.
Well, it many years ago it was Metallica, but now I'd have to say it's Tool.
Tool. Okay, cool. Yeah, they're very talented, that's for sure. Uh
Have you ever seen the video that was put together, basically playing Tool and talking about how the drum beat was a Fibonacci? A
no,
Fibonacci.
no,
Yeah,
no.
it's pretty cool. And anybody who's interested, do a search on Tool and Fibonacci after this conversation that we're having, and the video is really cool.
Wow. I do remember the claymation one they did. I think that was their first and I'm not a don't know as much about Tool, but I remember that video was quite interesting, the claymation one.
That was sober.
Uber, yeah, yeah. And somebody asked above, and scrolling up, I lose my place. But they thought about, are you surprised about the metal prices going up like they have, and what are your predictions for the silver price in the coming? Probably they didn't say any temporal notion there, but we'll just say the next year.
I think, if I had to take a guess, silver could do quite well because once it gets some momentum to it, people tend to pour money into it. But I would be very careful and very nimble. For example, the peak that it had in the 80s, where they said it hit $50, that was really intraday. If you took a look at the monthly close, I think it was something like 20 to $23 an ounce. So when it moves up, it can move up really, really quick, but you have to be ready to take advantage of that price. Same thing happened in 2011.
Right,
So once the momentum gets going in silver, it can do quite well, and I think that's what it's benefiting from right now. So the big question is how high could it go? And I wouldn't be surprised if the gold to silver ratio at some point hit 30 to 1 again, and it might even do better than that. But I hesitate to really guess as to where it's going to end up.
right. Understand. MH Andrews 11 asked, when you say keep the premiums low, when you're talking earlier, would you advise fractional bars from private mints or stay with government bullion?
Well, I'm going to contradict myself now.
Sorry, I
Bar,
do that all the time.
yeah, but bars definitely have lower premiums on the purchase. The trick is going to be to basically try to recoup any of that premium, because if you go to any kind of a local coin store, what they're going to usually do is give you less than spot, because what they're going to do is they're going to turn around and sell that to a refiner who's going to pay them spot. So they're going to need to make a profit. So when we're talking about premiums on bars, you have to ask yourself what is the spread? What's the difference between what you're paying and what you're going to be getting if you were to sell it? Now with the sovereign coins, generally local coin stores, some of them will actually turn around and resell them, so sometimes they'll be willing to pay you above spot. So you really kind of have to know, based upon the coin, what you're going to be able to recover in a sale. Now, what I can tell you though is that sovereign bullion coins right now, generally you'll be paying a premium of about 20%. And if you were to need to turn around and sell it quickly, meaning you got no chance for appreciation between when you buy and when you sell, chances are the local coin store is going to be only giving you a couple of percent above spot, in which case automatically you're out like 15 to 20% or somewhere in that neighborhood. Now that's not to say that I don't like the sovereign coins. When given a chance, I like to buy the sovereign coins, but I'm buying gold coins. I like gold eagles because I can purchase them for 2 to 3% above spot, and personally I think that's a good deal. And it also has the benefit that when you turn around and sell it, it's very easily recognizable because it has the stamp of the sovereign government on it, basically guaranteeing its weight and fineness. So you'll be dealing with a lot less scrutiny when you turn around to sell. And if you're looking at the big bars, one thing you have to also worry about is that they'll typically have to be reassayed when you sell them.
Right.
And there might be a fee associated with that. And I'll tell you about a problem that I had. This was back in the 2000s. I think it was like 2005, 2006 or so. I sold a 1,000 ounce silver bar and shipped it, and FedEx lost it for a few days.
Oh no.
Yeah, it was back when silver had hit 15, and I wanted to capitalize on it and buy some gold. And yeah, it was heart-wrenching because it was like losing a car.
Right. That's insane in the membrane. I'm sorry. I hope they recovered it and got it back. And
Oh, they did. It was sitting on the floor of the distribution center, one of their hubs.
right.
Nobody recognized it. Nobody knew what the heck it was. So there
Wow.
were like 1,000 ounce silver bars sitting there, and nobody knew what the heck it was.
Crazy. Silverino asks, how many countries leaving the euro will cause it to collapse?
Depends which ones.
Yep, I agree. If Germany left, that's one would have to leave and then it would collapse, in my opinion.
I think it could be France because Marine Le Pen is talking about having a referendum if she's elected, and I think there's a good chance of that.
Right, right. Venetian Lion asks a good question. What books would you recommend from an economics and monetary perspective?
Uh, well, let's see. I like older books. Ludwig von Mises had one called The Theory of Money and Credit. That one is very comprehensive, very theoretical. It's a hard read, so it's going to take quite a long time to get through it. Um, Another one that I like that was written back in the late 19th century was called Coin's Financial School, and it was written by William Henry Harvey, who was part of oh geez, which administration was that? He was the campaign manager for I think it was Garfield. No, oh it'll come to me. What? No, William Jennings Bryan. That's right. He was
Oh
the
yeah,
campaign
yeah, he's
manager
the
for
silver
William.
guy. He wanted the silver standard, right?
Yeah, so he basically was advocating for a bimetallic standard, and he talked a lot about the theory of gold and silver in that book, and you can obtain that one for free online, just like you could obtain for free the theory of money and credit. Just go on to Mises.org for the latter one, and there's a couple places where you can pick up Coin's Financial School. It's not on the Mises site, but if you Google it, you'll be able to find a PDF copy.
Okay. I think I found Allin Gold's clarification of the question, but I think you've already answered about your preferred bullion, gold and silver. I think you've already answered
What,
that question. Yeah. Let's.
he was asking about sovereign coins or numismatics.
Yeah, or just any bullion, gold and silver, what you prefer. But I think you pretty much covered that. But if you want to recap or whatever, sounds like eagles for gold, and
Yeah, I want to say something about that because I've noticed that I've managed to piss a lot of people off in my videos, which was not the intent with regard to numismatics. Um, some people can do very, very well with numismatics, but it takes a special kind of skill.
Right.
You have to really know your coin, really know your market, and if you're good, you can do quite well. But don't forget, when you're buying numismatics, you're really buying a collectible. You're buying a piece of art. It's
Yeah.
not the same thing as buying bullion. And my personal preference is to keep things as simple as possible, which is why I tend to restrain myself to gold and silver eagles, gold buffaloes, and I limit my exposure to numismatics. And there's a couple advantages of that, but I'm only speaking for myself, not for other people out there. One advantage is that it's very simple, so it's easy to do. Every month, you don't have to give too much thought to it. Your decision is basically going to be, do I want to buy gold this month? Do I want to buy silver this month? If so, how much? Are the premiums reasonable, which you can always get a good benchmark on. But the other big advantage I see in just keeping it simple and having bullion is that you're always going to know where you stand wealth-wise. If you have a collection of rare numismatic coins, and the more exotic, the more difficult your challenge is going to be. If you want to calculate your net worth, you would spend a lot of time going out to catalogs, to eBay, trying to see what was sold that was similar to your item within the recent past. And even then, the price that you'd be able to obtain could be actually quite different than what you see listed. And so, I would suggest to anybody who has a lot of numismatic coins, it would be an interesting exercise to put together a catalog of all of your coins, what you think they are worth, and actually go and try to get substantiated evidence from the websites, from auctions, and try to figure out what your coins are worth. And I think what you'll find is that it's going to take you a lot of time to figure that out. And when you do go to sell, you could also find that the faster you need the money, the lower the price you're going to take for your metal. Whereas if you just have bullion coins, you'll always be able to know what a fair price is and go into a local coin store and expect pretty close to spot.
Very good. Thank you. So back up, just for the viewer's sake, if I don't if I don't ask Paul your question, it means in some cases either I've missed it or it's already been answered, and you can go back and watch this video once it's published, it will automatically render once the interview is over. And by the way, speaking of which, I'm remiss. I hope if you have to leave at any time, Paul, let us know. I'm just kind of continuing here. How are you on time?
I have until about 5:30.
Okay, great.
By the way, I'd like to mention to everybody that if you have questions that you want to ask, I'm humbled by everybody asking questions on my site. So if you have questions, feel free to drop in. You can PM me, and I'll try to take the time out to answer. I always try to hit every question that I can.
Very good. We thank you for that, for sure. Here's a fun question by 32 Common Sense Guy. What is your favorite movie?
Favorite movie?
Or favorite movies, plural. It's tough to pin one down, probably.
Well, let's see. I guess my favorite movie of all time would have to be Pi.
Oh, yeah, Life of Pi?
No, not The Life of Pi.
Oh,
Pi.
okay, wow. As in 3.14159?
That's right. It's a movie about a deranged and crazy mathematician.
Wow.
And he tries to unlock the secrets of the stock market and ends up going insane as a result of it.
Interesting. Never heard of it. Wow. And then he goes on to ask what your favorite Western is. So I guess he thinks he knows you like Westerns?
Oh, I like Westerns from time to time. Unforgiven, I thought, was a really good one.
Ah, yes, that was a good one. Okay, let's see here. Moving on down. Do you like 80s music? I'm asking that while I'm scrolling through here.
Some of it.
Yeah. All right.
Okay. I liked Van Halen before they changed lead singers.
Yeah, yeah, David Lee Roth era. Okay, Argentus asked another good question. How do you feel about storage within the LBMA system, i.e., vaulting services? How about digital spendable gold services like BitGold?
Um, I don't know that I trust BitGold. I'm suspicious of any company that would offer you a 5% profit right off the bat for depositing your money with them.
Right,
So I mean, they say that you're buying gold, they're giving you a profit, and that's not what gold does. So I suspect that they're not using your money to buy gold. Um, as far as LBMA storage, I don't have much familiarity with it because I don't participate in that market. I do understand that that's where a lot of very big gold interests do their bullion storage, and I'm sure it works for them.
right,
So, the big money certainly does it, and one of the reasons why they take advantage of LBMA is to make a profit on their gold and their silver. Um, you'll notice the lease rates, at least up until recently, were published by the LBMA, and basically the wealthy people that own gold and silver can actually lend it out and make it generate interest. And a lot of people don't know that that's possible.
great. Okay, and by the way, Silverfish VT is on the side chat here, just kind of interacting. I don't think he's asking any questions yet, but he's still alive for those wondering, and it's good to see Silverfish VT. And so
Greetings,
yeah,
Silverfish. You're an inspiration.
yes, he definitely is. He's considered kind of the grandfather of the modern YouTube silver community. And I say modern YouTube silver community because I've been watching YouTube silver videos since probably 2008, 2007. There was a guy called Omega Man that was on who actually came back as Inside Silver as of late, who since disappeared. Um, but anyways, that's kind of a little side note here. The questions are kind of panning off. Okay, here's another one. Radovan Kovac asks, what signs to look for whether silver is going to be a monetary metal again with gold to silver ratio around 16? And we both agreed earlier that it's never stopped being a monetary metal. It's just that it's seen as a commodity more so in but we believe it's silver is money. You answered that earlier, but you want to elaborate more on that?
Well, silver is already a monetary metal. I did a few videos where I calculated what I thought the above ground silver stock was. And I published a couple videos on that and actually got a number of people annoyed because I said it was about 15 billion ounces. And the way that I calculated that was I used the mining production statistics going all the way back to I think 1850. And I assumed that maybe half of that silver was used up in industry, meaning that the rest of it stayed above ground in uses in jewelry and in private hoards. And that's very interesting to me and very important because a lot of people say that silver's value comes from the fact that it's scarce. I don't think that that's the case. I think silver's value comes from the fact that people store it and use it as wealth. And the fact that a significant amount of worldwide wealth is in the above ground stock of silver basically says that yes, it is being used as money.
Right.
Right. The only thing though to know though is it's actually quite a bit less wealth right now being stored in silver than in gold. But what I think is going to drive the gold to silver ratio to a much more favorable level would be when the middle class and the poor start to lose their trust of money and start to focus on keeping silver as opposed to bank accounts.
Right.
But as I've said in the past, the real question is going to be what's going to drive them to do that, and how much wealth really is going to start focusing on silver. Because at the moment, I think most of the wealth in the world is in the hands of the people with considerable amounts of wealth, and they're likely to focus their attention on gold simply because of its convenience.
Right. Okay, great. Silver Imp asks, will the U.S. banks eventually profit from the explosion of excess reserves? Maybe he's meaning reserve currencies and like from quantitative easing and the like.
Well, it's possible. What would be required is for people to start borrowing money again on a large scale. You know, I see the current low interest rates on the long end of the scale as an indication that people are just tapped out. Businesses are not borrowing to do projects, and I've seen that in my own company. I've seen it in the companies that we serve. They're finding it much more advantageous to shareholders to buy back stock than to invest in new projects. And because of that, they're also not borrowing money to put capital on the ground. I don't think that the private citizen, or at least most private citizens, have the capacity to borrow much more than they have at this point, and a lot of them are very fearful about the future. So without that demand on borrowing, I don't think the banks are going to be making a lot of money, regardless of how many reserves that they have to lend out. That's just my own opinion.
Right. And you kind of talk about in your own company. That reminds me of something to tell folks that may not understand. Where you work, you have a unique insight as to the markets because you're seeing kind of product move in and out, and the demand for products at that level is an indicator of what could come, right?
Yeah, I don't want to give up too much about
Right.
myself.
Right.
I do work in a very global company. It's a Fortune 300 company, and we produce feedstocks for the various industries of the world, whether it's steel, cement, glass, copper, gold mining, healthcare, electronics. All of these companies basically use our feedstocks. And so it gives us a very good indication of what's going on in the global economy, because when companies are looking to expand, they'll generally contract with us to provide them with feedstocks. And so lately activity has been fairly minimal, with the exception of the electronics industry and certain specialty chemicals. But worldwide, the economy is very slow. It's very soft. Um, there are some signs that it might be starting to pick back up a little bit, but I don't think it's going to happen for quite a few years.
And if it does pick up, it may not be to the level where it's any that's going to really help in the long run. Based off of the trends that you see there, because I think it's important, because I think this unique perspective gives insight to the community that we wouldn't have otherwise. Looking at a span, and this is me asking the question, because some of the questions have actually staved off in the side chat here, but looking over the past 6 months as an indicator from what you've seen, how would you compare the last 6 months to the previous low in your time at your organization?
The previous low, meaning 2008, 2009?
Yeah, I guess, yeah, that's right. Yeah, I guess, yeah.
Um, 2008 and 2009 was pretty scary because we weren't sure exactly what the company executives were going to do. We weren't sure what was going on in the money markets. The monetary system had almost frozen up. The situation that we're facing right now is really quite different. We're not really facing a monetary system that's freezing up in terms of liquidity. What we're facing is generally a very weak global demand, and so a lot of companies have already taken action to lay people off in order to manage their expenses. The thing that's worrying right now is that a lot of companies are also taking on a lot of debt in order to buy back their stock. and so that's leaving a lot of companies very weakly capitalized, and so they're nowhere near as strong as they were, believe it or not, back in 2008. And so it's not going to take much to push a lot of companies over the edge into bankruptcy at this point.
Wow, scary. Definitely. All right, here's another question from 32 Common Sense Guy. People argue that interest rates can't rise because the government can't afford their payments. Why can't they separate what they charge the public from what certain government rates are?
Like a two-tiered interest rate?
Yeah, I think that's what his question is.
Could you read that question again, Salvat?
Yeah, sure. Let me scroll back up here. People argue that interest rates can't rise because the government couldn't afford their payments. Why can't they separate what they charge the public from what certain government rates are?
Well, they're not really charging the public.
Or just passing it along. It's the banks that charge. I mean, I look at it this way. If we were to go into negative interest rates here in America, the banks would still charge a nominal fee or nominal interest rate so they make money, right?
Well, the banks could charge fees. They're not going to charge interest rates. So we're dealing with a difference between bank interest rates and government interest rates. They both are different.
Right.
Negative interest rates I don't think are a new thing here. I think there was a month or two back in the Great Depression in our country where we also saw negative rates, but it was on the very short end of the yield curve, and it was only for a brief period of time and only slightly negative. We're not seeing anywhere near what we've seen recently with the German Bund and Swiss interest rates and the Japanese bond rates. But yeah, I think the banks are getting squeezed right now, and that's one of the reasons why Janet Yellen is not going to raise interest rates right now. You take a look at the 10-year, which is a very important benchmark here, and it's only yielding about 1.5%. Actually, I think it's a little bit less than 1.5% now, and that doesn't give the banks much of an opportunity to make a profit. So even if they're not paying out interest rates on deposits, when they lend money, they're not going to be making much money on their loans, and so when they take out things like administrative costs and the gigantic salaries that they're paying their executives, there's really not much room for the banks themselves to make money and pay their shareholders.
Okay, great. Yeah. IKEOnet asked most of the companies doing the buybacks have a significant cash position. What examples are companies that are not solvent to cover?
A lot of industrial companies, like steel companies, copper, industrial gas, companies like that, they may have a strong cash flow right now, but if you take a look at the balance sheet, the debt to equity is at a very high level for most of these companies.
And I'm going to ask a question that's definitely going to affect the markets. Upon hearing my voice on this question, it's going to affect the market. So everybody pay attention. Bozo asks, Sal, how do you get cat hairs off of the blanket? Washing doesn't help. Well, my blanket that I do my unboxings on, the kitties in the summertime shed like a mofo. And my thought is, well, do I wash the blanket or do I just let the hairs accumulate? And I think it adds character. So what do you think, Belangp? Do you have a kitty? Do you
Well,
wash?
my kitty stays outside, actually.
Oh, that answers that question.
My kitty's a barn cat.
Ah, okay.
But I have a follow-up question for you, Sal.
Okay.
Why is it that a calico cat will always shed the hair that's the opposite color to the slacks that you wear on a given day?
Oh, that's a deep question. Because sometimes when I go to work, I get it on my pants, my slacks, my shirt. And I think it's a fashion statement that the kitty is trying to send, and it works.
Here's another question for you. A cat always lands on its feet, right?
That's right.
And if you drop a piece of toast, it's always going to fall buttered side down, right?
That's exactly right.
So if you strap a piece of buttered toast on the back of a cat and throw it up in the air, what's going to happen?
Oh, I think in that case, the kitty will land on its side because of the balance, the physical balance of the toast, and the Murphy's Law, which states that a cat lands on its feet and the toast lands on the butter side. So because of those, it's like a magnet, two magnets when they repel against each other. It's that same effect when the cat lands, and it will smart a bit depending on from which altitude that you drop said kitty. All right, and so now in our banter, and now people are starting. Now, once we get into bantering, now people start to ask questions. Let's see here. Truth Seeker, what is your opinion on the Dallas cop shootings?
Oh, it's very sad. Um, you know, it's just a symptom of our country is just tearing itself apart. I think other countries are tearing themselves apart. It's just sad.
And people don't realize that, though as awful as it is, things. Think back to 1968. That year alone was a very troubling time for America. We did get through it. We will get through this. I'm optimistic, but with media the way it is, things can get amplified very quickly in the Twitterverse and the like. And so I think people keep that in perspective, but we should try to be as optimistic as possible. However, the death and the hatred, and I did a video on this just last night, and it just needs to stop. And I hope that people will sense reason and understand that violence is not the solution to these problems. Let's see here. What is Belangp doing for vacation this summer? Silver Imp asks.
Well, I just took a half a day off to go to an amusement park with my kids. That was fun.
Nice.
And I think I'll be going to the mountains for maybe a week at the end of the summer before Labor Day.
Very cool.
Yeah.
Good. That's great. All right, IkeoNet, I think, is making a statement here. Isn't the debt used as a tax incentive? Okay. It makes sense with interest rates low and the cash flow is higher than the percentage rate. Maybe that's a follow-up to his last question. I'm not sure.
Well, you had, once again, I'll throw out some caution there. A lot of people see low interest rates, and it encourages them to spend. You can use debt to buy all kinds of items. You could use low interest rates to buy a car, and typically people will buy much more car than they need, especially if there's a low interest rate. You'll end up buying much more house than you'll need, and all of these things come with a cost, right? Cars break down, houses require maintenance. You get charged taxes on it, and regardless of low interest rate, debt also has a nasty feature, which is that it requires a cash flow. So it really limits your freedom. So when you're deeply in debt, even with low interest rates, you need to come up with a certain amount of money every month. Otherwise, you'll end up forfeiting your assets, potentially having to declare bankruptcy. So I like to encourage people to stay away from debt whenever possible, even if interest rates are low.
Right. I agree with that. Have as little debt as possible for sure. And just to remind viewers, some people have come and gone, but there's some new people and if you have a question, just put 2 asterisks before the question so that I know, so I can separate it from the banter on the side here. But I think here's one. And again, if a question's been asked in the earlier part of the broadcast here, I'll refer you to the published version of this video so that you can, rather than repeating the question here. Silverman asked, with government bonds yielding tiny interest, could governments go bankrupt or print money endlessly? That's an interesting question.
I think governments can print money endlessly until people lose faith in the currency, at which
Which
point it no longer works, right?
which reminds me of Alan Greenspan's quote about that very same thing. Yeah.
Yeah, I mean it's what von Haverstein did, which led to the German hyperinflation. He just kept on, printing money and printing money, and the debt basically ballooned, and eventually confidence was lost. But it's kind of a chaotic system. You never know when the point is going to come where people just lose confidence.
Here is another example of that. The most egregious example is here before you. This is the largest inflationary note in world history from one Mugabe of Zimbabwe. The U.S. debt is projected to be $20 trillion once Obama leaves office. Imagine how many times our debt could be paid off with this one note alone if one of these dollars in this $100 trillion was equal to the U.S. dollar. So this is $100 trillion for the Federal Reserve Bank of Zimbabwe. It took literally barrels of these to grab some bread in November of 2008, which is, I carry this with me in my wallet. That is says November of 2008 here. But in 2009, they replaced this note with the one new Zimbabwean dollar. That made everything better. But anyway, so yeah, this is an example of that, which could happen if we're not careful.
And it'll be easier in a cashless society.
It sure will be, because they can just digitize money. All right, let's see here. 32 Common Sense Guy says people have speculated Obama is counterintuitively trying to vanquish the various welfare systems by immigrating hordes of destitute people from other nations. Is this likely?
Oh, I don't know. There's lots of reasons why a country could try to get people to immigrate. One thing that I've been thinking is, we take a look at our current system of Social Security, for example, and it requires an ever-increasing base of workers to the number of people that are retired. And so having more people here actually paying taxes into the system would help things quite a bit. Same thing with Medicare, right? That the more people that are using it relative to the people paying into it, the less secure it's going to be. So a lot of the encouragement of immigration, both here as well as in Germany, could just be for the sake of those entitlement programs. Well, I shouldn't call them entitlement programs, because people have been paying into them over time, but
right.
You know what I mean, the social obligations that the government have made in the past.
Right. Thoughts on Bitcoin, Alex Rodriguez asks.
I don't know much about Bitcoin. It's again a good speculation, but I don't think it's stood the test of time. It doesn't have the monetary salience that silver and gold have. So while it can do well, I think that if people completely lose faith in the currency, I'd put my money on gold and silver.
Exactly. I'm 100% with you there. It's a completely faith-based system, whereas American currency, such as you see here, is a fiat-based system. And I think a faith-based system, it can be as uncanny as the latest Kardashian episode. Here's another market-moving question by Silver Slicker 001. Do you support the classic American love of bacon?
I am a vegan.
Oh, okay. Well, I'm a baconite. I mean, I like bacon, but I like the meaty parts. I don't like fat in my bacon. I like the lean meat. So if I have a strip of bacon that someone serves me, if I'm a guest at their house, I will sneak off the fatty parts of the bacon and just eat the meaty parts.
Yeah, I used to love bacon. But let me tell you, a few years ago, I read some very compelling medical evidence that basically talked about the impact of high protein in the diet, and
Oh,
I'd recommend highly anybody who's interested to read a book called The China Study by T. Colin Campbell. It's very interesting. It's about a long-term medical study that they did in China, and they followed various regions and took a look at various rates of diseases from heart disease to cancer, diabetes, and they linked it to various living habits, and basically found a very strong statistical correlation to meat consumption.
right. Yeah. Yeah. Yeah, there certainly is a lot of studies out there about health. In fact, I think Losing Louie just did a video about wheatgrass or some sort of grass or whatever that's like supposedly really good for you and the like. But there's other people that say protein and meats aren't good for you, and other people say that, like Ted Nugent says, the protein and meats, especially if they're organic or hunted meat, is really good. But it just depends. But I know bacon is very high in sodium, and that's one reason why I stay away from it, because I'm high strung anyway. I don't need any more sodium in my diet. I've got enough coffee.
Well,
I'm like, you ever seen that Mad TV skit, a stand, the Java Man?
no, no.
Oh, you've got to see. Those are some funny skits. But anyways, let's see. Oh, let's see. What else? I think there was another question up here. We might be exhausting our audience here. Uh,
We started talking about vegetables and everybody bugged off, huh?
yeah, everybody bugged off when they talk about. Oh, half dollar ones asks if Belangp subs to vegan gains, vegan gains. I guess
Vegan.
it's a YouTube channel. I guess.
Oh, vegan gains.
Yeah.
I think he's mean. I mean,
Oh yeah.
oh yeah, like yeah, a lot of vegetarians and vegans who are on YouTube. A lot of them are nuts. I mean, it's it's amazing. It reminds me of reality TV shows.
Yeah. Wow. So speaking of reality TV, Silver Hair Stacker is here, and he does videos on how he does eBay sales and makes silver money. Bacon is his choice for cholesterol control, he says. Of course, it's being sarcastic there. We call him Pops just for fun.
Hey, silver hair.
And let's see here. Um, PD Ballerina, we got to give her a shout out. She's here too. And let's see. Lots of good folks. Silverfish has made it through this whole thing. He's been just commenting on the side here. Okay, Silver Slicker 001 says, where do you draw the line between silver sold as a scheme, such as no longer in production silver, and semi-numismatic silver coins? I guess the marketing of silver, which that's very complex and very.
You're talking about small private mints?
Yeah, or it could be just bullion dealers, how they market silver. Silver, like for instance, let's say I was to say this salivate metal silver round, I was to push it and say, buy this because supplies are limited, and it's going to explode in price down the road. I guarantee it. And that type of thing, which is a privately issued piece. Or that's no different than somebody pulling out one of these and saying, hey, this is a limited issue, only 1 year issue from HSN. You better buy this. And this is just a bullion piece, but buy it now at this inflated price because I know it's going to go up because they're not going to make the spider design next year.
Well, there's a lot of money to be made on silver, and I'd point people towards that whole Rob Gray issue that they had many years ago with the silver bullet, silver shield thing.
Right.
So I don't know. I mean, some of these private mint stuff, I mean, it can be a lot of fun. Like I like the Zombucks
Yeah.
line that Provident Metals had put. I think it was Provident, right?
Yes, it was Provident. Yeah.
Yeah, that they had put out. And, there's a lot of other really fun coins, and it's a great way to get people interested in silver. Um, but I wouldn't pay real high premiums for them. Just buy them because they're fun. I wouldn't expect that, just because a coin has a pot leaf on it, you're going to be able to sell it for a huge premium later on down the line. Could be the exact opposite, right?
Right, exactly. Silver Stacker says, is the S&P 500 index funds the best choice based on returns versus costs?
Uh, Index funds in general, yes. Whether or not the S&P is the best, I don't know if there's a reason to believe that it would be any better than, let's say, the FTSE, or the EAFE, or any of those other indexes. Um, but I like the way that Jack Bogle had basically explained it at one point, right? At any one point in time, everybody owns all of the stocks that are available to the public, right? And every time they're sold between one party and another, it just ends up generating commissions for the financial industry. And so the best strategy, if you want to be an owner in a business, is just to basically hold forever. And that's what the index funds do. And because they're very low cost, they tend to be less of a drag on your wealth than anything else. Yeah,
I
that.
think I think we can agree that the FTSE index fund is the most flirtatious of them, right?
Oh, obviously, yeah.
All right, very good. Um, Silverman asks, Belangp, will you keep buying gold whilst the price is very high?
Yes, I think the saying that the price is high is a little bit problematic, because when you talk about price, you're talking about either a dollar value of gold, or a pound value of gold, or a euro value of gold. And as we recently saw, after Brexit, what once could have been considered a high pound price of gold turned out not to be so high. I like to turn it on its head and think about whether or not the currencies are fairly valued relative to gold, as opposed to the other way around. And I think that throughout history, what we've seen is that paper currency gradually declines in value. And yeah, it goes up and down, so that there will be points in time when it could look like the gold price is going down. Um, but I think in general, the trend of the gold price is always going to be up, because the currencies are always going to be depreciating in value long term. So yes, I will be continuously buying gold regardless of the price,
Yep.
until I retire and need to start spending it.
Yep. And I'm right there with you as far as the precious metals. Buy when they're up, buy them when they're down. And it's a whole mode of thinking. I put out a video a while ago called Silver, and of course you can apply it to gold as well, will never increase in value. And really, that's kind of my mode of thinking too. It's a paradigm shift of thinking. It's the currency's valuation in comparison to that which has been money since 700 BC.
Well, I think there could be a big revaluation, actually. When we say that gold and silver don't change in value, that's not entirely true. Um, it used to be that common people could not afford an ounce of gold.
Right.
You go back into history, you take a look at people's wages. And back when we were largely agrarian societies, it would be very rare for common people to own gold. But today, if you're an average ordinary worker, even if you're earning minimum wage, and you were to save for a few months, you could buy an ounce of gold. So that basically tells you, I think, that things are very, very cheap right now,
It's undervalued. That's right.
relative to our capacity to earn.
Right.
And so in the future, it's entirely possible, if our capacity to earn goes down substantially, either because oil becomes a lot more expensive, or whatnot, what you'll find is that the purchasing power of gold and silver relative to people's wages could go much higher. And so, I think they could change in value, but I can only see them going up long term.
And I was speaking more throughout history, that it's undervalued now, and the true value of the precious metals is is I mean, we're getting a good deal now, essentially a sale on the precious metals because of for the reasons you mentioned. But yeah, I mean, in terms of valuation compared to the dollar, yeah, there could be a revaluation and the like, as Golden Arms jokes for my sayings there. But anyways, all right, let's see here. I think we're getting towards the people are just kind of talking here on the side. And Silverman's kind of asking a question which you answered before about palladium and platinum. I think platinum, you probably have maybe the same view as palladium.
I like platinum more than palladium at these prices.
Right. Yeah. And let's see here. Okay. All right. Well, I tell you what. I think we're going to probably close this out, but I want to just give you, Paul Belangp, another any closing statements you want to say to the folks out there, or any other thoughts you want to share?
Yeah, I would. And my channel's been around for a few years, and I felt absolutely blessed to have, everybody subscribing and asking questions, participating, having conversations on the channels. I've enjoyed the videos that other people have put out. So I just wanted to express my gratitude to this community for having intelligent conversations and basically, backing each other up, supporting each other, serving as a means of, education for each other. So, keep it up. I'm privileged to be among you.
Great. Thank you very much, sir. We certainly appreciate you. You're a wonderful asset to the community, and I appreciate your time and your good sense of humor here. And putting up with my insanity, and so thank you again for this. And just for the folks that aren't aware on the side chat, if you missed any part of this, it will begin to render immediately once the broadcast stops, and you can watch it in its entirety once it's published. And I want to thank again my guest Belangp, but especially thanks to all of you for joining in on this and being a part of this and watching it live, and for submitting your questions, because that's what sets this apart, I think, is that this is driven by you and your questions. And I'm sorry if I've missed some of them, but there'll be more chats or more of these interviews coming up with perhaps even you, in the coming month here. So there it is. Thank you again, Paul Belangp, and extend a multitude of gratitude to you all for watching. And we'll see you next time. Take care.